are mortgage rates going to go up or down? The answer is yes. Okay.
Nailed it.
What do I think rates are going to do? Well, I think we all learned over the last 7 to 12 months that as optimistic as we were that the market was going to shift in the buyer's favor and rates were going to come down, we expected to be at 5% by now.
Mm-hmm.
Obviously, we were way wrong.
Just a bit outside.
Yeah, just a little bit. I still do expect that we'll see some slow reduction in rates, and I think the data backs that up, although the jobs market keeps running counter to that, which is one of the main reasons that it's still up. But not to get too deep into the weeds, the data supports that over the next 12 to 18, and certainly over the next 24 months, we should see a moderate decline in rates, which will be great for buyers because it'll make purchasing a home, it'll make financing a home more affordable. But then, of course, it's also going to mean more buyers coming back into the market, which is going to drive up demand further and push competition even higher. There's a lot of people sitting on the sidelines waiting for rates to come down so they can re-enter. So it's not like it's going to go down in a vacuum. But short answer is probably some moderate decline. Again, I don't think we'll ever see 3%. If we get to 5% in the next 2 to 3 years, that would be amazing. I don't think we'll see that.
Right.
What do you see?
Yeah.
You're deeper in the data than I am.
You know what's funny is I'm on record saying this. And so like you can look on my channel or on One Rental at a Time. I'm on, film saying this, and I can go back for the receipts that I told people, be careful what you wish for. You don't want rates to go down too much, too fast. No. It will be detrimental to you as a buyer. And to your earlier point, I agree 1,000% because I look at the, applications I have every single day. People need to move. And a lot of times it has nothing to do with the real estate market. It has nothing to do with mortgage interest rates. And so they're going to move. And so I'm looking out for what's in their best interest, which is a relatively stable housing market, which when rates are higher and we have the amount of inventory we have right now, it's pretty stable. Mm-hmm. You can go out there and look at a house. It's not going to fly off the shelf and sell within 4 days. You're not going to compete against 15 buyers. That's a good experience for the buyer. Yeah. The faster and farther mortgage rates go down, the more demand you bring back. If, there's not some magical, influx of supply, it's going to be a problem. So I'm on record saying I wanted rates to go down slower. And I said, if they went down, I can't remember exactly what it was, but I just remember being super conservative and saying, if we went from, 7.5 to 7 over the course of 2024. And then if we went from 7 to 6 over the course of 2025, in my head, that was slow compared to all these, analysts that were talking about like 6, rate cuts in 2024. Yeah. The funny part now is I'm looking at it and I go, it might go down even slower than that, right? Based on the jobs data and all the other stuff that's happening. I think that it probably was a little bit of just kind of hopeless optimism that people were like, you know what, at a 5.5% rate, this mortgage will look a lot sweeter. I just want rates to be 5.5% without thinking about what the unintended consequences of that would be. And so I think it was Fannie or Freddie or Mortgage Banker Association, whichever it was, their predictions for 2025 were like 0.1% decrease per quarter. And so I think it was like 6.9 in Q1, 6.8 in Q2, 6.7 in Q3, 6.6 Q4 of 2025. And so if we went over that trajectory, I think that with mortgage rates being at that higher level for a sustained period of time, we're seeing inventory come to the market because just natural, like people have to buy and sell. And this frozen market that we've kind of lived in where people weren't selling because they were locked into lower interest rates and whatnot, like it's slowly unwinding.
And I think that's where a nice, stable, slow decline, like you said, will be helpful because it keeps the market stable. But the longer we go at this level, the more that piece that you're talking about, that frozen market where, I'm in that place myself. I'd love to have a different home than I have. I've been in my house for 25 years. But at the same time, I'm at 3%. So why do I want to sell that at 3% and go buy even, at the same price at 7.5%? It, I
The
don't want
math
to
don't
do
math.
the math don't work. So I don't want to do that. But there are those, again, for whatever circumstances they need to move, they'll be less resistant as those come down. Obviously, the gap closes, so it's a little bit easier for them to swallow that move. But more importantly, the longer we're at this, again, it becomes the norm. We're back to reality, and again, the price of bread is the price of bread. If you're hungry, you got to eat.
Right.
You don't like it, but it is what it is. So I think we'll see a slow thawing of that, and as those people start to move, then what happens is the inventory comes up. It frees up that piece, more supply equals out with the demand a little bit, eases pressure on prices. So it's
Yeah.
good for us all.
Yeah. I like your analogy. The price of bread is the price of bread. What comes to mind too is I like to be straightforward when I have conversations with people. People come to me, I'm sure they come to you at the real estate market and they're waiting for some big event, some 30% reduction in prices. And
Election.
right, in elections, do prices go down by 30%? Do rates fall off a cliff? They kind of, are desperate for something different than what we have. But, gas is $5 a gallon in California. The price of bread is the price of bread. As much as we want it to be different,
Yeah.
it's just, it's not in the cards to be different. And so I know this got brought up earlier today. Somebody mentioning like, what if home prices fall off a cliff? What if home prices go down by 20 or 30%? Like, what do you think the chances of something like that happening? Based on a guy who's been in the real estate market for decades.
Yeah. Well, show me the data that points to that any evidence that that's even possible at this point. I mean, short of a national disaster or, larger, I don't think there's anything evidencing that or anything even pointing in that direction. A lot of people think back, and because this is more recent experience, they think back to the crash of '08 and say, well, it
It
happened.
happened.
But you think back historically, it's happened, unless I'm wrong, exactly once in the recorded history of home prices in the
Mhm.
United States. And that was '08. And there were a lot of factors that came together to make that perfect storm. You know, um, Unemployment was high, home equity was record lows, prices were declining. So that means you couldn't get out of the house if you wanted to. You couldn't sell without taking a huge loss or doing a short sale or something like that. Today, what happens? Somebody loses a job, God forbid, something tragic happens, they have to move, they're forced to sell. Well, they walk away with 200K in the bank.
Right.
There are worse things in life, but there's so much equity. We're at record levels of equity on home ownership, and so if you have to walk away, you can walk away and get away relatively unscathed.
Right.
It may hurt a little bit, it might take a little bit of a haircut, but you can get out and you'll survive. That stuff wasn't present in 2008. Not
Right.
to mention the whole rest. The job market was terrible. So many things.
The loans we were writing, were not even anywhere close. Neg, am, and pick a payment and all that.
I could tell you some stories. I was on the real estate side at that point when
Mhm.
that happened. And some of the offers that we saw coming in, we saw people coming in with offers that were, $100,000 over list price, which would never appraise. And the guy was saying, "Oh, don't worry, I've got an appraiser that'll bring it in." And of course, that was a big part of the problem with the market at the time,
Right.
is that there was a lot of that kind of shenanigans going on
Yeah.
that really undercut the whole market.
Yeah.
And so a lot of that got cleaned up. As we know, we're extremely highly regulated now. It's, much to our chagrin sometimes,
Right.
because it makes our job more difficult.
Yeah. That's the thing too. I think people need to realize 2008 and all of the problems that the real estate market had and all of the things that were wrong with it, like none of that stuff exists today. Literally none of it. Loans, way, way less risky. Like we've gone to the opposite end of the spectrum where it was like, a pulse and a warm body and you'd have a loan.
Yeah.
Versus today, people are like, man, getting a loan is hard. Well, it's for a reason, right? And they regulate it and they made sure that you're well qualified.
The market learned its lessons.
Right.
And the regulators learned the lessons. And, we can argue that there may be some over-regulation, and that's probably true in some cases, but it started to ease off a little bit. But it should be tough to get a home loan.
Right.
It should be tough to get any kind of loan. I mean, the bottom line is, can you pay it back, and are you going to pay it
Yeah,
back?
and that's the thing too, is like one of the lessons you said the banks, or we've learned our lessons, is that like we're not trying to enter, a state where people are foreclosing at mass.
No,
And
no,
so
it's hard.
I read something recently. One thing that wasn't in place back then was all this forbearance and all the things that are being done today where, even if we have people that fall into a situation where they can't pay, which is going to happen. It's going to happen in any market. The banks are doing everything in their power. Forbearance, work out something with you. Like foreclosure is not good for anybody.
Mm-mm.
The bank doesn't want it. The consumer certainly doesn't want it. And so there's that just layered onto all these other reasons why there's not going to be a flood of inventory from foreclosures. So, where is this 20 or 30% decline coming from? I hate to break it to everybody, but it's not coming.